Bloomberg Audio Studios. Podcasts, radio, news.
Hello, I'm Stephen Carroll. Welcome to this special Bloomberg Daybreak Europe podcast. The UK government's borrowing costs hit a new milestone at the start of trading today. The yield on the 30-year bond hit its highest since 1998. It adds more pressure on Prime Minister Keir Starmer's government to take steps to restore the confidence of markets ahead of the budget next month. Joining us to discuss are Chief UK Economist Dan Hanson and Bloomberg Opinion's Marcus Ashworth as well. Marcus, I'd like to start with you as our resident bond market expert. What is driving yields to these levels, and what's the significance of the milestone we're seeing on the 30-year?
I don't think this is a particularly UK-focused crisis, if it's a crisis here. This is just global bond yields, particularly long-end yields, driven at the moment by the US. We can see US yields going up, and the 30-year is getting close to 5% again. So that's what's worrying people stateswise. So we've got France having a political shake-up, and obviously we did have some quite substantial news yesterday that, look, it looks like Rachel Reeves' career is over, and she's being, boxed in comprehensively, and Darren Jones will be either the next Chancellor, or if he plays his cards right, could be the next Prime Minister at this rate. So I think there's significant downgrading of the Treasury's influence. That makes some people a little nervous, perhaps, because what will happen next? Will they drop the OBR rules? There's all that sort of stuff. But we're seeing a sell-off in the pound, which means that some people think that interest rates are going to have to be cut. So I don't know what the markets are sending us a bunch of different signals, but I mean, the practical reality is the real reason we're off a bit today is there's a big 10-year syndicated sale tomorrow. And dealers are hedging ahead of that, and there's nothing there at the moment to buyers to come out in the long end. We know that for quite some while. It's the pension funds don't want it, so it's very easy to push the market, get things cheaper for a nice, lovely, cheap sell tomorrow.
Dan, let me bring you in here. I wonder if your interpretation is that it's curtains for Rachel Reeves, as it is in Marcus's interpretation. And really, even if the cause of this yield move, as he says, is international, what the domestic consequence is, because surely this is going to hurt her headroom.
To some extent, yeah. I think one thing we have to be really careful about is you have to think about where the DMO is issuing debt at the moment, and it's issuing debt at the shorter end of the yield curve, and it's made a significant shift away from the longer end of the yield curve. So focusing on 30-year gilts is not a good barometer for whether she is getting more or less headroom as a result. If it's a reflection of what's happening along the rest of the yield curve, then yes, of course. But if the curve is steepening, just because the 30-year yield is up, whatever it is, 5 basis points, doesn't mean it affects where the DMO is issuing debt. Because as Marcus just said there has been this huge shift in demand, and the DMO is shifting supply to match that. I ran the numbers before I came in the studio, though, because I knew were going to ask me something like that. It's as if we talk before we go on air, Lizzy. And I think if you run it back of the envelope, it takes about 8 billion away. So she had 10 billion of headroom. All else equal, imagine the whole world is unchanged apart from this moving gilt yields. She would have 2 billion of headroom, so you wipe out nearly all the headroom just based on the moving gilt yields. Of course, that doesn't take account of the policy U-turns that we've had, and also, of course, the potential for the OBR to downgrade its outlook.
Okay, so that doesn't leave it very healthy fiscal calculations for the upcoming budget. I mean, what does the Chancellor need to rethink, I suppose, what the markets want in terms of headroom this time around? Because clearly the vulnerabilities that we've seen over the past year have told us that the amount that was left the last time wasn't enough.
I mean, I think that's exactly what needs to happen. I mean, there is this, of course, you have to be realistic about, if the OBR hands her a really difficult forecast, there's only so much she's going to be able to do to get back and go back to even where she was at the start, the 9.9 billion, as you said, Lizzy. But I think it would be extremely prudent on her part to just take a step towards building more headroom. Now, it might not be that she gets to the levels that we've seen in the past. So on average, chancellors have left themselves about £25 billion worth of headroom. So she's miles away from that. But even if, if you send the message that you are aiming to move towards that, of course, knowing, depending on whether she's Chancellor, to picking up on what Marcus says, knowing that come the next election, you will have a war chest to spend. That's how George Osborne did it. So you will have a war chest to spend. I know you're desperate to say something there, Lizzy, just give me a minute. I think that would be a really important message to the market, because as things stand, we're in a merry-go-round, aren't we? We have this conversation every 6 months, and it's not just that it's affecting markets and yields, it's affecting how people spend and what they're doing in the real economy.
But you know what I'm going to say to you, Dan. Is that politically realistic? Yes, it may make economic sense. Yes, it may help to calm the market. But can Rachel Reeves and Keir Starmer afford to put more spending cuts or more tax rises past the left wing of the party? I know that that's more of a political question. Let me put it to Marcus. Marcus, can you see that happening in reality?
Well, I think they've made room for themselves to be able to drop Rachel Reeves, and probably with that the OBR fiscal rules to some degree. And then clearly, as I said, I think they've got Darren Jones in there, and they'll be watching like a hawk anything that Torsten Bell comes up with, courtesy of Minouche Shafik in number 10 as well. So that gives them, I think, at some point more flexibility when they will ditch, I think, Rachel Reeves, and there will therefore be a change, but they'll have the replacement in place almost. But yeah, I think fundamentally, if they wish to get re-elected at some stage in 2029, they have to do something seismic. And I think they know they're going to have to grow the economy properly. And at some point, they're going to have to break manifesto promises, whether it's on tax or a number of different things, or get very busy indeed with their backbenches and indeed cut spending, which is really what the market wants. The market doesn't want tax hikes per se. I mean, it's better than nothing because they'll make the numbers, but they know the economy will suffer badly for it. They do want government spending cuts, and at some point, someone somewhere has to deliver it. And I think they will have to have another go at this. It's going to be difficult, but I think they'll need to get the budget out of the way cleanly first, and then move on to the second stage of this very rocky first Labour government for a while.
But Marcus, how would markets react to a scrapping of the fiscal rules at this stage?
I don't think they'd care as much as people fear they would, as long as it's done in a sustainable fashion, which is going to be growth positive and make sense, rather than this ridiculous hair shirt that she strapped herself to deliberately, thinking it was clever, and made mistake after mistake from literally day one, when she should have turned around and said Jeremy Hunt's bungs on employee national insurance should be scrapped instantly. Yes, there's some form of magical black hole, which obviously wasn't, but never mind, you can blame it and get away with it. And change her approach from day one.
Do you not remember what happened in the markets when Rachel Reeves cried? I mean, they said that was personal, but even the idea...
I think we're finding out what she was crying about, aren't we?
No, but the idea that Starmer would replace Reeves triggered that sell-off in the gilt market. Surely it can't be the case that the market would just accept them tearing up or tweaking the fiscal rules. Dan wants to come in. He's put his hand up because I'm the teacher.
She tried that in the October budget. She tried to loosen the fiscal rules and invest loads of money. And the OBR said, yeah, it'll lift the economy a bit, but not very much. So it's really difficult. I mean, it feels to me like the trade-off is between, as Marcus says, ideally lower spending and day-to-day spending, or higher tax, or volatility in financial markets and higher gilt yields. So you just have to pick your poison, really. And it depends which way round you want it, because the market is going to react if you don't have these fiscal rules in place, I think. And if you loosen them, I think there would be I'm not as relaxed as Marcus is about it, because I just feel they would react poorly. But I hope he's right, of course.
I'm only relaxed, Dan, in the context that if there's something sensible, an actual fiscal plan which makes common sense.
Yeah, so absolutely.
It's dramatically got to be something which the market can buy and look past a few more gilts being sold and this, that, and the other, if it actually ends up making some form of logical sense. But one thing she has done recently is very much reduce, as Dan alluded to already, but the second time she's reduced an amount of duration of gilts that are going to be sold. I mean, there is almost no long end issuance coming in the next 3 months. In fact, more coupons will be paid out than the fact they're raising money and the long end. So we've got a big 10-year tomorrow, which is really what I think is driving this particular sell-off. As I said, you actually look at the rest of Europe, France, etc., Italy, they're off higher in yield this morning. So it's not a UK-specific move, this. But there is a big auction. It's 10 years. You'll find there's almost no linkers coming in beyond 10 years. There's very little long end supply. She's shortened that duration hugely. She's getting out of her own way. And the Debt Management Office is doing an excellent job for her in that sense, and we have a lot less exposure. We need to have a lot less exposure on the long end, but they've moved very quietly but very, very firmly in the right direction, which should make all this less dramatic. But you just put that in the context of how much yields are up, and they've reduced gilt duration by so much. My word, if they hadn't done this, we would have been above 6%, I suspect, by now.
Dan, Venram on our Markets Live blog is writing that if the sell-off in gilts continues, the Chancellor will have to say something before the budget. How likely does any sort of pre-budget announcement look to you?
Not very high at the moment, I don't think. I mean, as Marcus has said, there's so much of this is global, first of all. And I don't think the government's going to want to be seen to panic about this. The other thing is, if you come out and say something, you need a plan. It needs to be marked by the OBR. It's just, obviously silence isn't great, but I think coming out and just saying anything or something would probably spark more concern than just waiting and going through the full process with the OBR. I think that's a really important bit of this as well, is what they say around it, because what you don't know at the moment is what they're thinking. It's possible we're getting ahead of ourselves and they're not thinking about making a big growth downgrade, and that would mean that the work she has to do, at least to restore the 10 billion of headroom, would be less. Of course, I would argue that in that case, you would try and build the headroom further, so the amount of tax rises or spending cuts, whichever one it might be, would be similar. But I think it would just spark panic if she did that, I think. But there may well be, what I would potentially guess is that there will be a statement alongside the announcement of the budget date. She might make a statement in Parliament to sort of set out the strategy for the budget, if you like, to try and calm nerves. But I think that'll be as far as it goes. It won't be sort of pre-announcing any sort of policy.
Can I add one quick thing here, which we haven't mentioned, is the Bank of England.
Well, I was going to ask you this, Marcus, because you've got your column out about how Andrew Bailey isn't helping matters with his rhetoric.
I've got one coming out tomorrow. It's even worse. No, it was mostly about the gilt stuff, which I've already mentioned here. But the point here is that if the Bank of England does not stop long-end active quantitative tightening, as in selling of the long-end portfolio at their next meeting, then we will have a bit of a crisis. So the market is very much expecting a reduction. Dan's done a wonderful piece on this. They'll probably cut it back quite a lot from what they thought it would be. In practical terms, it makes no real change from last year, but in overall amount they sell, both through passive runoff and then indeed active, will go down, should we say, from 100 to 60, 65, something like that. And within that, the active sales will be around the same as this year. But more importantly, we weighted very much to short, medium terms, i.e. not take the massive losses that they've done on long-end gilts up till now, which has destroyed the long end of the gilt market. Even Dave Ramsden's mentioned it could take up to 25 basis points in yields. I think it's quite significantly more than that. But the point is, if that doesn't come in for the Bank of England, then Rachel Reeves has a much, much harder task.
OK, Marcus Ashworth, Bloomberg Opinion columnist, and our chief UK economist, Dan Hanson, thank you very much for joining us. This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.